All right, everybody, welcome to the HPT Live Webinar. This is where we meet weekly to discuss our strategy, discuss our edge, discuss trades that we took, what was going through our mind, how the strategy's doing, how well we're executing it, right? Because that's the most important part. I talk to a lot of traders, and most traders struggle with consistency, and it's because their input is not consistent. Their approach is not consistent. Their strategy is not consistent. And this was something I used to struggle with for so long. And it happens because we have so many different strategies bottled up in our brain, right? We've watched so many YouTube videos. We've learned from so many people. And yes, the knowledge is valuable, but it's only as valuable as the application. It's not a knowledge issue, it's an application issue. And what that means is it's not your inability to understand what's happening or what you're looking at. It's your inability to follow a repeatable approach that is consistent. Every time you add 1 plus 1, it always equals 2. If you're doing 1 plus 1, 1 plus 3, 1 plus 8, you're going to get different answers, right? So you need correct input to get correct output. And I want to talk about today, this week, and some days that I did very well with executing and other days where I struggled. And we're going to talk about what was going through my mind and what I gathered from my journal and how we moved past it, right? So we're going to dive right into it. Monday. Beautiful example here of the HPT cross. Let me throw up the pit numbers here so we can get an understanding of what we were looking at and why we took the trades that we did. All right, so going into Monday, we had purple line right here is previous day low. Gray line right here is end of day. And my first upside target was pre-market, this pre-market level right here. It wasn't PDH, but it was just a pre-market level. And then previous day high was way up here at 575.50, which you'll see ended up playing a massive role the next day. So I have the 1 hour time frame up over here on the right hand side. 1 hour time frame plays a mega role in every single trade that I take, right? I always tell everyone in HPT, if you take anything from this community, let it be how we use the 1 hour time frame. The 1 hour time frame is detrimental for trading with market conditions, right? The proper understanding of who is in control. Is it buyers? Is it sellers? Etc. Right? So let me see here which day. Monday was right here. Okay, so coming into Monday, you're going to see here on the 1 hour, I was looking, hold on, let me just get this right here. Yeah, 11.4. So coming into Monday, I was watching the 1 hour time frame, pre-market plan. I was pretty bullish above it. I was pretty bearish below it. Bearish targets were PDL and down in, 569 over here. Upside targets were previous day high and pre-market level. Right, so you're going to see here in the morning we get a rather quick move off open print, but there was really no retest. And open print was also aligning with end of day, right? That's that gray line right there. They were pretty close. So I was looking for a retest at this level to take the market short. I was looking for a green bar to be ignored. I was looking for buyers to lose it, right? And because this is what we call a sweet spot, right? When you got two pit numbers really close to each other, we actually have three because open print. This is a sweet spot for sure. We want to figure out who's controlling this level and trade with them. So you're going to see here, we didn't really get a retest I was looking for. This is the 5-minute TF, by the way. Couldn't really get the retest I was looking for, and then buyers started to show some strength. Right, so I'm going to whip up SPX because it just makes it a little more clear on why I took this long. So let me just get this right real quick. We're going to go time frame 10 days, 5-minute time frame, and then we're going to look at 11.4 right here. So SPX, you're going to see here, price rips into end of day, sells off, and then comes up into end of day, right? So this is where the HPT cross, the whole strategy behind it really helps, right? Because we're coming into end of day, right? I'm pretty bearish due to the 1 hour time frame. I'm pretty bearish on the day. And it just goes to show, right? We're intraday day traders. We don't always need to get the most perfect trade of the day. We just need to capitalize on a dollar move. If I could capitalize on a dollar move, 70 cent to a dollar move on SPX, I literally make almost 50% ROI on the trade, right? So we don't need a serious, massive move, and that's what I was proud of this day, because we were coming into end of day, and instead of marrying a bearish scenario, I was like, well, what does it look like if buyers show up, right? And you're gonna see here we got open print at 5725. We break above it, we retest it, and then right here you're gonna see we get this green bar that wipes out that red bar, right? So at this point, I'm gonna get in the market long. I'm using the 5-minute time frame here, and I'm gonna target this level right here, which is 574. What is this? 5746, right? So very simple upside target. That was aligning very well with pre-market high that I grabbed from SPY, and I caught a really nice pop here to the upside. And what I was really proud of, right, is how I use this moving average here. So you're gonna see I caught about a $1.20 move here. I got in the market around 57140, and I got out of the market around 57250, right? And I was able to exit the trade without hitting my quote take profit, right? And this is something that took me a while to get to, right? Like, a lot of traders struggle with holding trades, and a lot of traders struggle with needing the perfect exit, needing it to hit their take profit. See, if you can find the sweet spot in the middle where you're executing your trade and you're getting out, this was a phenomenal trade, over, I think it was 68% ROI, really quick pop that I was able to lock in. And what really helped me lock it in is look at how far away we got from the blue line, right? So once you get extended from this blue line, you have to be, like, look at the candle before it. I'm going to hold in this, because the blue line, it's on the blue line, it's hugging the blue line. On this candle, we're about 80 cents away from it. So if I want to hold the trade, I have to be okay with an 80-cent pullback. So if I'm not okay with it, I exit the trade and take my profit. It's a really good trade. It ended up reversing, and which makes sense because the 1 hour time frame was very bearish, and price then sold off, right? So that was my only trade for the day. I was really happy with it, and I thought it was cool how once buyers lost the 50, notice here how price falls down, and then we get that beautiful move right down there to the downside. So one and done for me on Monday, and that's I've really been trying to implement that rule, right? The one and done, right? Like if you're locking in, a 78% ROI on one trade, there's nothing wrong with walking away and being done, right? Over trading is a very serious problem, and I'm not, like, Friday I took 3 trades, right? So, like, I guess what I'm trying to say is you got to know when to really crack the pot because it's hot, right? Or when not to, So I thought I did a really good job doing that. It was definitely it was a good move, nice pop. I think I also exited relatively quick because the 1 hour was that bearish, and it was a good trade though. It was a really good trade. All right, so that was Monday. Now we're gonna dive into Tuesday. I just made a YouTube video on this day. I thought this day was a really awesome day. This day, I had some traders ask me about this day, and I'm glad they did, because days like this used to, this day really shows us how to use the 1 hour time frame, how to use the moving averages, and how to identify what we call acceptance, right? Like acceptance, I use that word almost every day in the pre-market plan, and it's really important that we all know what that means, right? So acceptance is being able to understand who's in control of the level, right? So we have previous day high right here. Let me just put it right there. End of day, which is down there, and previous day low, which is down here. Okay, very simple. There's my pit number. So now I got my 1 hour out, and on the pre-market plan, I'm going, okay, guys, I'm looking to use the 1 hour 50 today, right? Just like I did the day before. And I'm going to be super cognizant of who controls the 1 hour 50 to either play upside targets or downside targets. That's my approach every single day. Where's my pit numbers and where's the 50? And where's the 1 hour 50? Who's controlling it? Like, I don't want to sit here and say always if buyers are controlling it, it's always going to be bullish and vice versa. That's not what I'm saying. But what I am saying is it is a tool that we can use to simplify our approach. There's no point in getting extremely over analytical with your pre-market plans and with your trading approach, right? Honestly, the more simple, the better. That's a quote from Steve Jobs. The more simple, simplicity is the highest form of intelligence, right? So if it's simple, it's extremely intelligent, smart, and wise, right? So using the pit numbers, very simple, right? If buyers hold it, I'm targeting PDH, and I think my upside target was 5743. It's like right around here. I'll show you guys where I got my upside target too, by the way. You see, hold on. Oh, right there. So market structure speaks again, right? So you guys see where I got that? 57444, right? So this is how I'm looking at the day. I go, if buyers can hold the 1 hour time frame, 50 EMA, I'm long targeting PDH and 57444. Where am I getting that? All the way back on, 11.8, right? This is classic market structure. Break, retest, break, retest. If this level can't hold, target this level. If this level can't hold, target this level, right? Which would have been previous day high, right? Using the pit numbers, the critical levels, the levels with higher amounts of volume and volatility and liquidity, these are the levels we want to trade off, target, enter, exit, etc. Right? So that's my approach. 50 EMA, pit numbers, upside target, downside target. So now it's up to us to identify acceptance. Okay, what's acceptance look like? Well, you're going to use the HPT cross, right, which tells us who's taking control of the market, right? We're getting the cross, we're crossing back above the 50, and the EMA cloud has turned green, and now we're ripping into PDH. It happened very fast. So once we're ripping into PDH and the market looks like this, there's two things going through my mind, right? Is this bearish? Are sellers going to defend this, right? Because go back to the 1 hour, this is a supply zone, right? This is previous day high. I used to always assume that sellers were going to show up because they did yesterday, but now I use my moving averages to figure out who is in control of this level. Moving averages, when used properly, are going to lead you to trade with who is in control. Not as naive as, oh, we're above it, so we must be bullish. No, that's not what I'm saying. What I am saying is if the trend is healthy and there's not extensions, right? If price is hugging it, right? And you gotta do it. You gotta get familiar with it, right? You gotta go back, look at data, look at your charts, look at your winning trades, and ask yourself, because this is what helped me on Friday too. This helps me every single day. I go, is this trend healthy? I've studied so many trends. I've gone back and look at this trend right here. Is this healthy? Absolutely. How do we know? Well, there's no extensions. Right? Look, there's literally prices hugging it the whole time. So it continues to go up. We fell below it, but once we got back above it, look at how price rallied. Right? Right there. Bam. How about this downtrend right here? Is this healthy? Absolutely not. Why? Because look at how extended price is from the moving average. At this point, we are $1.60 away from it. That would have been a great long entry if there was a level there. Oh, there is. Where? Off the red bar that was completely ignored, right? That's literally how I took that long on Friday. Same exact criteria. RBI, retest, extended from the 9, got back in, right? So learning to understand what a healthy trend looks like will help you identify acceptance, right? So once I'm looking at that trend, I'm going, all right, this is healthy, even though I feel uncomfortable, even though I'm going, oh man, you're longing into high of day, Josh. You're how many times has it reversed on you? I get all those same thoughts, guys. The difference is I go, you know what? The data tells me that when this happens, right? Look at this. Rip into it. Come down. Green bar, red bar. Red bar, ignored. Bam, long, stop below it. Beautiful move. Right into upside target. 57444. This was beautiful. I actually sold a little early. I sold at like this candle right here. Because I just kind of psyched myself out on something, and it happens, right? Like it happens. You're gonna make mistakes. It was still a very good trade, phenomenal return on this trade, and more importantly, I was very proud that I didn't allow a critical level to psych me out. I didn't allow my mind to psych me out. I stuck to my process, which is critical levels and moving averages and RBIs, right? And I executed it really well with tight wrist. There was zero drawdown on this trade. It felt extremely good. And just notice here though, right? One more thing before we move on. If you did go short here, right? I'm going to ask you something. If you went short here, because I used to do this all of the time, right? This literally made up of 80% of my losing trades about 2 years ago. But if you were to go short here, at what point would you realize you screwed up? Right here. If price ripped up above the candle you shorted, if price ripped up here, that's probably where you would realize, oh, I screwed up. So if you could get rid of the short play and go, all right, what if I went short here? At what point would I be getting stomped out? Maybe that's where I should enter. Bam. Look at that. Start to reverse. Like, it's so crazy. If you're an inconsistent trader, right, which I was for many years, I would look at my losing trades and go, how could I do it? How could I do the opposite of what I did today? That was literally a valid question. I'd be like, all right, where I'm at right now is not working. How can I do it opposite, right? And ask yourself, like, every single losing trade you take, go, how could I have looked at it differently? How could I have took it differently? And you'll realize, right, where you're usually going short, maybe you should go long. Where you're usually going long, maybe you should go short. But you'll realize, right, a lot of people wanted to go short here, hence the red candles. But large money was in control, and we were able to notice this using the moving averages and the RBI. So I was really, I really liked that day. It was different, but I was happy with the way I traded it, and the rest of the day was really good.
Textbook chart right there.
Yeah, isn't that Todd? Look at, oh, it's like we always talk about, like you gotta take it, right? You got to take it, because if you don't. Which I'm going to show you. I think next day I didn't take one. And I psyched myself out, right? And we're going to go into... Wait a minute. That was Tuesday. All right. Let's go into Wednesday. Wednesday I didn't take this, right? And it's not that I... refused to take it. I just got to the market a little late. My girl was sick, so I had to get my daughter completely ready, get her to school, XYZ. And I missed the trade off open print. I was a little butt hurt, right? Because I had some traders ask me in the team. They're like, Josh, what are your thoughts? This is the criteria, and I wasn't able to get in on it. But we're gonna go over it real quick. You have open print. And just look at how buyers cannot get past it. Another reason I was not going to lie to you. The election happened. Trump took office. I think it was this day. And, no, it was the next day, I think. But with election time, there was a lot of scare on social media. Be careful when trading elections, whatever, right? And so I was just kind of viewing the market from more patient standpoint, right? But look at this off open print. It just goes to show it doesn't matter what's going on. If your edge presents itself, you should be taking it, is what I'm getting at here. We got the open print. We got green bar right here, red bar, and then this green one right here. Bam, gets ignored. That would have been a beautiful short entry, targeting 586.30, which was previous all-time high. I thought it was very interesting how price rips into this level, and then buyers just started to show up very strong here, coming into the market. And once we got above open print here, where was it? I went long. I did get one long in right on this candle. Hold on. Why? Oh, that's why. Hold up. Do this. All right, there we go. On this candle right here. So we got open print, we got red candle. Then this candle wipes the top of it, right? So at this point, I'm in it. Look, and it wipes it by 3 cents, right? The high of this candle is 58938. The high of this candle is 58941. Red bar ignored. I'm in it. Stop below it, right? So once again, risking 40 cents here off open print. And using the moving average, the 1 hour moving average, right? Going, hey, is this trend healthy? We're closing on top of it. Yes. So, right, using the 1 hour to gain insight on who's in control. Caught a pretty good move up here. It wasn't the largest move. I got out of this trade on this candle right here, this red one, because I didn't like how this red candle closed below this green candle. But it was still nice pop here. Really good trade. And the market just started to rally. And then Thursday, there were no... I took one trade Thursday. I did not like the way I traded. And just to break it down real quick, this is what happens when you hesitate. So, I'm going to whip out the 1 hour here real quick. And you'll realize here on Thursday, we had previous day high way down here. We were we were gapping up, right? So we were gapping up pretty significantly. We had PDH all the way down here, previous day high. We're gapping up. So look at the 1 hour time frame. Price is hugging the 9, right? We're not extended. We're hugging it, and we get an open print break retest. Buyers hold it. Price comes back into open print right here. And then I wanted to long this, but this red candle was very large. It was 53 cents. I definitely should have still long this, but I chose not to. Right? I didn't feel I just didn't pull the trigger. And you know, to be completely honest, it's okay to not take every trade, but there was multiple trades I could have took and didn't. Right? Like once I missed that first one, look at this one. Look at the red bar here on the 5 minute. That we come down, we get a retest. Look at the trend. Very healthy. We're hugging the 9. We get this little pullback here. But you could have used all the tools to get back into this trade. I end up kind of overthinking the day, taking a step back. And then I go to the gym. And then while I'm at the gym, I just decide to take a long play off this level right here. And I end up getting stomped out. I'll show you, though, why I took the long play. Hold on. Right. Which day was it? was this? Okay, it was right here. I took the long, was it this day? Where the hell did I do this? Hold up. Yeah, it was right here. No. Yeah, okay, right here. This was it. Yeah, I'm not proud of this long play whatsoever. Basically, we came into the 50, and I ended up taking the market long, getting stomped out really for no reason other than I missed the morning, and this was like a self-sabotage play. And this stuff happens, right? Like, it happens to everybody, right? I'm not sitting here saying I am immune to making bad trading decisions. It just happens less than it used to, but I made a stupid play right here, right? And then I was like, okay, I cut. It didn't get out of hand. It was around 30% loss, which is on average what I usually lose. Or I'm sorry, that's the most I'll lose on a trade is 30%. And I walked away, journaled the day, and decided I was going to come to the market better on Friday. And that's so important, right? Because so often, guys, like, we're going to make mistakes. We're going to have bad days. It's up to us to not let those days crush us anymore, right? You're going to have bad days. You're going to overthink things. But the goal is to make sure you don't blow accounts. You don't overtrade and keep revenge trading, right? Learn to walk away. So after doing a lot of journaling on that day, I decided I wasn't going to let a large red bar keep me from longing, and I ended up getting in the market long on Friday around here at 59666, right? So you'll see here on the 1 hour, once again, we're hugging price. So if I get any bullish indication, I'm going to long the market, right? I'm not going to assume it's going to reverse. None of that. I'm going to follow trend until it changes, right? It's very important. Never assume anything, right? And also we're getting the moving average cross here. Very nice move. We go long on this candle. Once we break the top of that one, my stop is going to be as close to the bottom of this candle as possible. And we take profit on 90% of our position up here. I had I just traded 2 SPX contracts, so I just sold one, and then I let the other run. And you'll notice here, price just banged into PDH and couldn't get below it. And you know, a lot of traders ask me about holding positions, right? And you just have to accept the fact that if you're trading 2 SPX cons here, and you're up around 58% on your long, and you take profit on one of them, you got to understand that, you know, this is probably going to cost me 30% to get to stomp out of this, even though it was right around my entry. And it just is what it is. You have to accept these things, right? And be like, well, what's the 1 hour time frame look like? Is it worth it to hold? And if you guys watch the live, I just kept referencing the 1 hour. I was like, this looks so bullish. I mean, it's hugging price. I mean, it may not look bullish in front of me on the left chart, but on the right, all the data tells me to hold this trade. So we held it. It was a really good play. I ended up stopping out on this candle right here, where we took profit. And then my next trade was on, once again, using the 1 hour. It was really nice. It looked very well. And then once we got let me whip out the 5 here. So once again, right, this is actually very important. I used to start thinking short, right? Look at the chart here on the left. I used to be like, oh man, it's going to tip over. It's got to tip over. It's rallied. It's gone $4. This thing's got to tip over, right? Wrong. It does not have to tip over. It will follow 1 hour trend 80% of the time. So I'm going to trade with that 1 hour trend, right? Instead of thinking it's going to tip over, assuming the short play, I'm going to be patient and wait for the long play. And I got back in the market long on this candle right here. Yes, it was this candle right here. Once this candle wiped this candle out, boom, back in the market long, targeting the highs, where I ended up getting out of the trade on this candle right here, right? So once again, just capturing nice little pops here, nothing crazy, but trading with that 1 hour trend. All right, Todd, ask that question one more time.
Yeah, I was wanting you elaborate on hesitation and how it affects your win rate and when you log trades,
Yes.
um, and how it affects how you log. And when you go back and look at the chart, it seems if you hesitate, your risk reward gets bigger.
Yes.
Your chances of making profit gets less if
Yeah.
you hesitate, and
Yeah.
how it affects the win loss ratio.
Oh, the confirmations are costing money. Bro, that's such a good question, man. It's so important because I truly believe this is one of the main reasons why most traders are not making consistent returns. To have a consistent business, right? A consistent um, uh, system, the hesitation cannot be present, right? So, like, if I'm going to have a confidence in a strategy, right? So, first thing is you got to have a strategy that you are looking to repeat, one that has a positive win ratio, right? We'll use ours for example. The HPT cross, right, has 72% win ratio. Now that number serves many purposes, primarily one being that it gives us the confidence to pull the trigger when we see it, right? Regardless of how we feel, regardless of what's going to happen, what may happen, whatever emotion we're feeling that day, right? If we're stressed, if we're anxious, if we're fearful, if we're doubtful, or if we're overconfident, it doesn't matter. The win ratio is our superpower, right? That's our understanding that the strategy works and it's what to expect, right? So when you have a strategy and you're clear on it, you know what it looks like, it's now your job to do one thing and one thing only, and that's to execute it. It's when you see it, you pull the trigger. When you see it, you act. If you don't, right? If you hesitate, if you decide you're not going to take this one, but you're going to take the next one instead, well, what that does is completely depreciates the win ratio. It completely changes it. Because if you're trading out of 10 trades and 7 of them are profitable, and you decide not to take one, well, now that 72% win ratio off the rip has just been cut into like 60, I think it's like a 62 or maybe even a 60% win ratio because you've now lost one of the profitable setups, right? So now your hesitation has caused your system, your process to no longer to be as profitable as expected. So now you need to make more money on the remaining ones and you need to lose less money on the losing ones, right? So it's so important because you're probably not going to adjust your risk reward, right? You're probably still going to take profit at 30%. You're probably still going to take your loss at 30%. But now your system doesn't have as many winners, which is now diluting your consistent results. And not only that, right? I hesitated this week on one trade, and yeah, okay, it has negative implication on the profit standpoint, but also on your mentality, right? Because if I hesitate on a trade, I'm not taking the setup because I either am anxious or I don't trust in it or I want something better, right? These are all low frequency emotions that make you get low frequency results, right? Low frequency emotions are like emotions that are you're usually taking out of fear or anxiety. They're negative, right? And what happens is then you get negative results. So learning to log the trade, study the win ratio, and believe in the setup is extremely important for us to become the traders we need to become. Actually, it's like it's the key that unlocks the door. If consistency is a door, the key to unlock it is your execution and not hesitating, right? Or if inconsistency is your prison, then the key to get out of that is execution, and in believing in your strategy and executing it no matter what. A disciplined trader in the zone. The books from Mark Douglas really talk about this a lot, and that's what he talks about. Is people start to think certain setups are special, right? Or oh no, this one I don't like. I want more confirmation, right? I want more evidence that it's going to work. So then maybe you wait, right? Let's look at Thursday, right? Because this is what'll happen. It used to happen to me all the time, right? So I did not take this morning setup. The reason I didn't take it is there was no cross in the moving averages. So I don't want to sit here and say it was, a complete hesitated move. But let's just say I wanted to take this and I didn't. And then I couldn't get in the market. And then say you hesitated. So now come up to here, you're like, okay, I'm going to get in the market the next time the price touches the cloud. And then you finally get in because you watch everyone else on the team make money or whatever it may be. And then it seems like you're always getting in at the exact wrong spot. Well, that's because your hesitation's off, right? Your hesitation's present. Your execution's off, right? And it's a very big problem. It happens. It's very hard to get past, and it's only hard because most traders don't log their trades and they don't study their data, right? If you studied your data, if you put the reps in, if you logged every setup and you reviewed it every night, you would know that no setup special. It's your only job is to execute. But yeah, it's so important. It is a great question, Todd.
Yeah, I appreciate you going through that.
How?
And that's why people ask me about. Of course, I trade the futures market. And I trade mostly on a 2 minute while watching a 5. They said, why is your stop so tight? That's too tight. You're gonna get stopped out. I don't care.
Yeah.
Stop me out.
Yeah.
I can re-enter.
Yeah.
But I'm only gonna stop out at one bar.
Yeah. Exactly. And then your winners are gonna be 2, 3, 4, 5. That's a consistent system. That right there is that's profitable. That right there, limit risk, substantial reward. And it's thinking shit special is what keeps traders inconsistent. It's what happened to me too, big time in my beginning years of trading. Is I was constantly looking for something special. And now it's not if it's special, it's if it's repeatable. That's it. If it's repeatable, I gotta take it. I've been using the 5 minute and the 2 minute a lot, and you'll see these RBIs on the 5 minute. Man, the follow through on these are crazy. And what's really cool is even when you miss them, right? Like look at this RBI right here. I stomped out on the candle before it on that long, and then I was looking to get back into the market. And I didn't want to chase it all the way up here. So I allowed price to come back into this box, right? This RBI, look at it's a box, comes back into it. Where I used to be thinking short, now I'm thinking long. All because that 1 hour time frame. But yeah, this day was wild, man. I caught a trade there. I caught a trade there. And then I caught a nice scalp right here as well. To the upside, a complete explosion. Because on SPX, that was a super psychological level. That was 6,000. And it's so crazy how psychological this level was. Look at it. You got 6,000 right here. And price just ripped into it, rejected. And then pop. Once this level popped, red bar, ignored, pop, stop below it. This thing just ripped, man. This is exactly what you're talking about, Todd. You risk 1 bar to make a banger.
Yeah. Break and retest of a previous zone.
Yeah, it's over.
Give me something strong out of it.
Yeah.
Man.
Something strong out of it, bro. That's a skill right there. Give me something strong out of it, right? Like that right there, seeing that acceptance, seeing what that looks like, and acting on that instead of predicting something's going to happen, right? Instead of going, oh man, sellers are going to show up here because it's 6,000 psychological number, it's going to reverse. Hell no. What's the candles telling me? What's the moving averages telling me?
Show me.
Yeah.
Show me something.
Yep. Give me a reason. Those words right there. Give me a reason along this. And that was it right there. This was these contracts exploded right here. The volume that came into the market was intense right here. It was insane. But yeah, it was a good week, man. Great, another good week executing, and just staying focused. And you know, we've been at this, Todd, for a while. It's starting to become very systematic. There's really, you know, nothing special about it. It's just repeat every single day at this point. I love it, man. This has been really good. I appreciate you coming today, T.
Yes, sir. It seems like the longer you're in this game, it starts to slow down so much.
Yeah.
It makes it so more fluid. You know. When I first started trading, it was like so fast, and I thought, oh my god! But after years and years of doing it, it just starts to slow down, and you don't get as tense when you're watching the chart.
Yeah.
You just hit the button, no emotions, and let it go.
Yeah. Well, if I've learned anything, it's no matter what, I'm gonna wake up tomorrow. All the anxiety shit's just in my head. You know, this is just a market that goes up and down. I don't know who I am. It's literally just doing its thing based on everybody else. And it's one of the biggest blessings we got, because we can literally, if we can execute in this market properly, we can literally make as much money as possible with no effort, little to no effort, as long as you can execute your system properly. You're 100% right, though. It's like it slows down, is way less dramatic. You know, it's not as, you know, I remember, man, I used to get so worked up over it. And now it's just like, oh, yeah. But, all right, T, have a great weekend, my friend. I will see you on the Discord Monday.
Sounds good. Thanks.